Are there loans for the self-employed? Yes! And we're going to run through some of the differences to these mortgages. We're going to discuss loan amounts, down payments, and something very important related to reserves. And make sure you stick around to the end where we run through the steps in a bank statement loan, which is one of the self-employed mortgage loans out there. Hey there, Christian Walsh with Wire Associates. We're real estate brokers based in Southern California, helping buyers and sellers and tenants and landlords during these crazy days. And we're here to talk about mortgages for the self-employed. And this is an important topic for me in particular because I'm considered self-employed and I know there's a lot more of you out there. So there are special loan programs that you can tap into if you're self-employed. And remember, we can't give tax or legal advice, but for the most honest real estate advice, subscribe to this channel. And we don't arrange financing. We're going to help you find the real estate you ultimately buy. If you're interested in pursuing one of these loans, make sure you reach out to my buddy Mike. I have a link below that you can click and start an application with him. An important first point, these are not like the loans that we had running up to 2008 bust. These aren't the ninja loans, no income, no job, no asset verification. These are legitimate loans with responsible underwriting, and you will need a good credit score. Depending on the loan amount, the minimum will be 660, but most of the loan amounts have a higher requirement for the credit score. Another important point, when the going gets tough, these are some of the first loans to disappear. So when the economy turns and it's tougher to find a mortgage, the availability of funds drops, the mortgages for the self-employed are usually some of the first that are cut off and they no longer issue. So if you're self-employed and looking to make a move right now, you may want to do it before things change in the economy, and then you won't be able to get a loan. So let's run through the full doc versus alternative income documentation loans. So full doc loans are what most people are used to. So if you're paid with W-2s, it's easy. You turn in your tax returns and they pull your credit and you have a full documentation loan. The self-employed, on the other hand, find it may be difficult to go this route. They're usually paid by 1099. They may have irregular flow of income. And there's some self-employed that may be taking very large income tax deductions while they're doing their taxes. So that's why they may not want to go this route. There may be other routes where they can show more income to qualify for a home. And that's where the alternative income documentation loans come in. And it's a general category. There's several different ways to qualify for these loans. But again, credit will be pulled for all of these, but they can use a stack of 1099s. You can use a profit and loss statement from the last year, and it could be generated by a CPA, and some loans allow it to be generated by the borrower. Another popular one, and we'll run through the steps in this one, is the bank statement loan. You can use 12 or 24 months of bank statements, and this is helpful for those who have a lot of cash coming in to show the cash and potentially qualify for a larger loan. So let's run through the characteristics of alternative income documentation loans. So there are a lot of similarities to regular full documentation loans, but there are some key differences. One is the interest rate will definitely be higher on an alternative income documentation loan. And it's not going to be double or triple, but it will be higher than the lowest rates that you can get with full documentation. You'll find that you have the same options for adjustable rate and fixed rate. So the adjustable rate loans can be 7 or 10 years, and the fixed rate can be 15 or 30. And additionally, you will find that there are interest-only options as well. So there are some similarities with loan amounts. So you can find widely available loan amounts up to $3 million. And there's even super jumbo product available that goes up to $10 million loan amounts. Now, of course, these are going to have higher down payment requirements. So let's discuss that down payment, otherwise known as loan to value. So the loan to values do go up to 80 or 90%, which means a 20 or 10% down payment. But the higher the loan amount, the higher the required down payment. Some lenders will allow gift funds to be given to cover down payments and closing costs, just like traditional full documentation loans. One major difference are the reserves. So you're going to find that in many cases you are going to be required to have a pile of cash that covers loan payments sitting aside. So in addition to the down payment and in addition to the closing costs, you'll need money to cover anywhere from 6 to 12 months of payments. And the payments include principal, interest, taxes, insurance, and any HOA dues. So just make sure that you understand the reserve requirements for the loan that you're going to take out. And usually the reserves are higher as the loan amounts go up. But make sure you understand the reserve requirements and have that extra cash above and beyond the down payment and closing costs. So let's run through the steps for a bank statement loan. So first, you're going to choose your loan officer. We have a link to Mike below if you'd like to reach out to him. And you're going to compile 24 months of PDFs of bank statements. And that's every single page, whether it has fine print, whatever's on there, every single page for every month for 24 months. You're going to put that in a stack or send it digitally to the loan officer you choose. From there, that loan officer will send it to be qualified. So there'll be somebody that will run through all those statements and add up all the income for you. And they don't count everything as income. They don't like big cash deposits, and they don't like balance transfers. So those may not qualify as income. Of course, you'll have to run through your scenario. And then from there, they'll take a percentage of your income. So it could be 65%, it could be 50% of that income, and that will give you the amount of income that you will use to qualify for the loan. The next step, it's now time to run your credit and find your debt so that your debt to income ratio can be calculated. So they're gonna wanna make sure you have a certain credit score, and they're gonna take all those debts and figure out what you can afford using that adjusted income, what can be afforded per month for the loan. Now's the time you're going to figure out whether you're going to use 12 or 24 months. In some cases, if you have significantly more income that's come in 12 months, it may make more sense to just use 12 months. But an important point is the rate will be higher for a 12-month bank statement loan versus a 24-month bank statement loan. So it's going to be numbers. You got to run the numbers with your loan officer to figure out which one makes more sense for you. And from there, the mortgage broker is going to submit to the lender, and you are off to the races to get your approval and ultimately find the real estate that you're going to buy using me or somebody I help you find. So we hope you found this helpful. If you're self-employed, it can be difficult to find a loan, but make sure you do it. If you're ready to buy, now is the time to find a lender that specializes in self-employed mortgages with record low rates. Even though these mortgages do cost a little bit more in interest rate, you're still going to be locking in a record low rate, even with that little extra that's on there. So leave your comments below. Let us know if you've tried to find a mortgage, if you're in the process of looking for a mortgage as a self-employed. Let us know how it's going for you out there. Make sure you subscribe to our free weekly email newsletter where we cover topics like this, plus other important topics for buyers and sellers and tenants and landlords, including market updates and updates on eviction moratoria. You can click the link below to sign up, or you can text newsletter to 949-691-3566. Thanks for tuning in. This has been Christian Walsh with Wire Associates, and we appreciate you.